Hello traders, welcome back to Your Nifty Guy. I hope all of you are doing well. The market stayed tricky today. We had moments where it looked like a clean move was setting up, but every time momentum built up, it fizzled out just as quickly. It was one of those sessions where patience and discipline mattered more than execution. In today's video, I'll walk you through exactly how the day unfolded, what the charts were showing, where the traps were set, and how I managed my trades through all that noise. More importantly, we'll analyze what today's structure is hinting at for tomorrow, key zones to watch, possible scenarios, and my trade plan going into the next session. If you're finding these daily breakdowns helpful, make sure to give this video a like and subscribe to the channel. It really helps the channel grow and keeps me motivated to share these daily insights with you every single day. So let's jump straight to the charts. Today, the markets actually opened with a slight gap down below the zone below yesterday's low, basically, where we were looking at shorting the markets. And once again, the market is showing us the power of pullbacks and why just using a small filter like a pullback before trading any breakouts or breakdowns helps and save us from getting trapped on the wrong side on so many times, right? So markets opened below here. This was quite a lot of indecision around here in the first 15 minutes of the markets. And then the pullback did come in, but then the low was never breached, right? So we never got a short entry. So right now, why I say that the market is confused is we are once again firstly back inside the zone in which the sideways market the market was trending or trading in, and we closed around the lows of that zone on Friday. But then again today we although we opened below it, it was a double top formation on a daily time frame as well, and we should have continued the journey downwards if the market had intended to go. The stage was set up, everything was clear, but then again, still, today was a day of extreme, again, sideways price action once again. Uh, Apart from that, the only trade that I took today was this short trade around here. The reason, again, being extremely simple, after the gap down, the markets formed a high, which was again kind of in lower formation only, but then formed a high above the day's high, gave us a small pullback, formed a new high, right? Again gave us a small pullback, but this time around markets did not manage to give us a good continuation in the trend on the long side. And out here, if you see, it formed a clear double top on a smaller time, not on a smaller time frame, but then it went up, gave a pullback, again gave a good pullback around here. So entry number one, both of these entries are right. Right? Entry number one could have been around the when this particular swing low broke in. This could have been entry number one, but then again, since a bigger swing low was still lying pending around here, just a short distance back from where we could have entered, I waited for markets to break this particular swing low, and as soon as this swing low was taken out, I entered into the shorts with a stop loss just above this. This was the exit for me. Number one, we did not break this particular swing low, last swing low, which was then, and this was a good enough bullish candle for me to exit my trade. Like I say in option buying, make sure to exit the moment market shows slight movement against your position, right? So this is where I got out. I entered into the next week of options. As you guys already know, on expiry as well as expiry minus 1 day, I switch my trading to the next week's options. So that is the reason why I shifted to the next week option. In this particular trade, I captured around 13 odd points, right? So this is just a trailing stop loss method for me, which got hit around here. And 13 points were captured. Post this again, markets formed a double bottom around here, but then I was not interested in taking any long trades because we are near trading near the bottom of a double top formation on a daily time frame, and around here I believe we should trade our long trades with caution only. Post this, I actually observed this particular trend line which is coming in since the last couple of days, and I drew and waited patiently, but because this is a long term time frame plus as in a trend line which is continuing for the last couple of days. I did not want to trade a breakout of this particular trend line just on a 5 minutes time frame. And I was just simply observing. I had decided to not create any long entries around here, but then again, the markets have given us a good price action around the break of this trend line. If you see and observe it on a 15 minutes time frame, we have got a breakout above it, a good retest of the trend line, and then again looks like a continuation. So whether it will continue or we are going to, or the momentum is again going to fizzle out, is something that we need to wait in tomorrow's price action. But then we are back again inside this range, right? The trend that we were looking at, or maybe the trending moves that we were looking at, might again be some time away. And then what today looks like a good base formation. So if you actually look on the daily time frame, I'll hide all the drawings once. So this was the double top that we were speaking about. We closed near the lows, although we breached it, but we are back up again here, and we have got a closing above the neckline for the double top formation, right? So for the time being, again, all I can say is the confusion is still there to continue. We are again back inside the range, and we'll just simply be readjusting the fib level that we have. So yesterday we had drawn it with as per Friday's low, but today since markets have made a new low, we will be moving and adjusting our fib levels accordingly, right? Roughly this is the range. Cool. Now, before we make the market plan for tomorrow, tomorrow is the weekly expiry of Nifty. So anybody who is into trading Nifty options, using option buying as a trading mode, make sure to shift your trading to the next week's expiry, right? Make sure you're not trading on the 4th of November expiry, but you are shifting it to the 11th of November expiry. That is what I did today. That is what I'm planning to do for tomorrow. And only the option buying trade that we can look for based on the change in OI is something that we will be using uh, tomorrow's expiry, that is post 2 p.m. only strictly if the OI and the change in OI gives us good enough signals. Otherwise, all trades to be done in the following week's expiry. You might be paying a slightly higher premium for your entries, but then you will be doing yourself and your capital a lot of favor just by shifting your trading to the next week's expiry. So yeah, let's begin for tomorrow. So this is the fib level, and above today's high. So we have broken out of this trend line. We have retested. If we are in the mood to continue, if the market is in the mood to continue, we are prepared. We plan a long entry. Around these resistance levels, if we observe negative price action, yes, of course, we can take a short trade. Above this, we are taking a long trade. Now, also, so for any short trade, I will wait for this particular swing low to be taken out. Below this, we are short. If we actually look at the price action around here, say for example, this high does not get breached, or maybe gets breached slightly, not getting continuation, and then this low gets taken out, you can also get an early trade on the short side at the breach of this particular as well. I will be shifting my trade idea. Yes, I will. We will be back again inside the trend line as well. And right, I hope you're getting the gist what I'm trying to understand, trying to explain with regards to the price action. We have broken out, retested. If we are not in continuation, and if we are going down below this particular trend line, uh, again, because once we are again entering back into the trend line and we are going back below this, this is also will be a double top formation, but then this trade will be a low probable one. a higher probable short trade will only be below this particular swing. So make sure to be aware of that and trade accordingly, right? So tomorrow is the weekly expiry. We are back again in the range. Expect some volatility. Trade with lower quantities, trade with constraint, right? The market is testing your patience right now. Do not get agitated. Do not get let the emotions get the better of you during such times. That market is not letting you get a clean trade, right? These are phases the market moves in, and this is something around which you need to hold your composure even more. And yeah, that's it. So that wraps up today's analysis, a day that once again reminded us that trading isn't about catching every move, but about protecting capital and waiting for the right setup. Tomorrow brings a fresh chart and new opportunities, so we'll stay alert and ready. If you found value in this breakdown, don't forget to hit the like, subscribe, and share your thoughts in the comments. I'll see you in tomorrow's video. Until then, trade smart and stay disciplined. Cheers, and thanks for tuning in, guys.